Hey there guys, and welcome back to my channel. In today's video, I'm going to be talking over Forex versus futures. As I've seen a lot of controversy on social media, and there's so many people now taking the switch over to futures. So today I'm going to be breaking down the key differences between Forex and futures to hopefully make you identify which one is going to be best suited for yourself. Without further ado, let's get straight into it. So my first question to you is going to be, which would you rather trade? Would you rather trade choppy price action? Or would you rather trade price action that has clear structure? There's a reason I'm asking this question, so let me explain. So this is a daily chart of the most traded Forex pair in the world. This is Euro USD. And as you can see, this price action is pretty choppy. And it kind of stays within a range. Now take a look on screen here. This is the Nasdaq, or you may know it as NQ. This is on a daily chart, and as you can see, there's clear structure going to the upside. So my first question to you is, would you rather trade clean price action or more manipulated and choppy price action? See, the difference with Forex and futures is Forex is designed to range in the long run. You can actually see that this has pretty much been stuck in this range for the past 15 years. Now, if I take a look at a monthly chart on NQ, you can clearly see there's a big difference. If you're trying to master price action when it's manipulated, it's choppy, and it's designed to range, it can be very difficult to get on the right side of the market. However, with futures, the direction's pretty clear 9 times out of 10. Over the long run, futures are designed to go up, and over the long run, Forex is designed to range. So you have to ask yourself, which do you prefer? Now I'm going to talk about spreads. I'm not too sure if you're aware of this, and futures-based prop firms have 0 spreads. Do you ever find yourself in Forex, you want to enter here, but in actual fact, you get filled somewhere up here? You originally wanted to get in line with price here, but instead of getting filled here, you actually got filled something like this. And then this massively scuffs your risk to reward. Just this slight difference changes this trade from a 1.28 to a 2-hour trade. Now in Forex, when news releases, spreads go even crazier. Or just prior to news release, your spreads will go from somewhere like this to something like this. And then you'll have random bursts of volatility in Forex markets as well. And that's what we call manipulation. But in futures, there is 0 spreads. This meaning, if I wanted to get in line with price on this candle closure of this gap, I won't be entered somewhere random up here or down here. I'll be entered exactly when I push the buy and sell button at the exact price. So getting filled on orders has never been easier. You don't have the anxiety of spreads and scuffing your risk to reward. And when I trade futures, there's no fear of me over risking, because I know if I get filled here, my risk is already set. However, in Forex, if I had my risk to be on this candle closure here and I risk $500 and spreads fill me in here, that means I'm risking more than I intend to. So just keep that in mind. So I did a bit of research on prop firm match, and I found the most expensive prop firm with CFDs, and I found the most expensive prop firm with futures. Now let me explain. Okay, so we're going to compare the prop firm pricing now. Now, if you're someone that trades Forex, most likely you're going with CFD prop firms, something like FTMO, Alpha Capital, whatever it may be. Now, the average price for a CFD prop firm is about $400. And to actually get funded, you require to pass a phase 1, which requires 10% profit, and a phase 2, which requires 5% profit. And then you are funded. Now with futures, it's a little bit different. So first of all, the pricing is $79 for an 100K account, and was 4 times cheaper than a CFD. Phase 1, you have to make 6%, and phase 2 doesn't even exist, meaning that after you've made 6%, pass the account. So prop firms in the future space are killing it at the moment because they're so much cheaper, they're really easy to scale with, but there's a lot of anxiety about the consistency rule. And I don't really understand why, because your job as a trader is to trade with consistency. So consistency rules shouldn't be getting in the way. I know I'm a consistent trader because every time I hit take profit on an 100K account, it's always an $1,000 profit. And if the consistency rule is 20%, all I have to do is hit 5 trades at $1,000 profit and I can get a payout. It's that simple. So don't be scared of the consistency rule. It's super easy to work around. Again, there's no spreads on these futures accounts. Futures accounts are much more cheaper and easy to scale with. CFDs are much more expensive and take a lot longer to pass. Now I do actually trade both. I have an account with FTMO, but I have 300K funding with futures props. And to actually scale up funding with prop firms is so much easier, and it's a much quicker process as well. I can pass accounts on prop firms within 2 days. Because they're so cheap, I can just full port them. And if they lose, it's okay because I can buy another. Now I could buy 5 accounts for the cost of 1 CFD account. So I hope that puts it into perspective for you. Now I want to talk about manipulation and why it's important to know when trading Forex. If you didn't know, Forex markets are very manipulated, meaning there will be random spikes of volatility and a lot more stop runs. Now you can see here that we've had some really strong bullish momentum, and then the momentum to the downside is even stronger. And then we get another random spike of volatility back to the upside. Now with futures, you wouldn't expect this. You can see how much cleaner it is. The pullbacks are much shallower, allowing you to get involved in price a lot easier. And there's less random spikes of volatility. This is on the same time frame at the exact same time, and you can just see that the spikes of volatility are really not that strong. So when I see something like this come into discount and I see momentum out there, I know that price is likely not to return to this area. Now, what does this mean for me as a trader? Well, it just means that if I get into a position, I'm less likely to get manipulated out. There's a lot less random spikes in volatility, meaning I've got less anxiety going into the trade. And because NQ is so obvious when it wants to go somewhere, it's so easy to get in line with price. Now, as a little bonus for you, what I'm going to do is break down a trade using the model that I use. And I'm going to be using it on NQ just to show you how simple it is to actually trade this asset. We're at New York Open. Let's play price out a little bit and just see what happens. Now we have actually created a divergence down at this low here. You can actually see that we're rejecting this gap, and we have a divergence that lies within this gap as well, which is nice. Notice as well that we have actually come into discount of this range here, and we do have this gap up here. Okay, so we have candle closed this gap here. So I will actually take a long on this. Got my stops just below this gap. You can see I've got a really tight stop, but because again futures is less manipulated, having a tighter stop is really no issue whatsoever. And bang, would you look at that? Really simple. And that played out in the space of 1, 2, 3 minutes. Quite like the momentum from this. I'm looking to take a short off this inverse gap here. See if I can get a better fill. Cool. Right, I'm going to take a stab short.
Order fill.
Love my stops here. I do like the momentum behind this, and we do have a higher time frame div, so I am anticipating a flush lower. I'm just aiming for a 1 to 2 on this. I am also half risk, so see if we can get a flush down to this low. I'm going to move my stops to break even there. Don't really want to see us return to this area now. If I get stopped at B, I get stopped at B. Okay, that's nice. Seriously, a tick. Just fill my order, please. So let me be done for the week. Send it on a W. There we go.
Order
Beautiful.
fill.
Nice trade. And that is literally how it's done. Super simple, not overcomplicated, just a couple of confluences that work on a consistent basis. So if you're looking to take the switch over from Forex to futures, hopefully this video has given you a bit of insight on both. Both do have their advantages, but overall for me personally as a trader, I want to trade cleaner price action, I want to trade less manipulated price action, and I want to be able to get the best read on the market possible. And with futures, this is very easy to do. So I'm going to ask you this question before I leave you to it. Which price action would you rather trade? Would you rather trade this, or would you rather trade this? Let me know your thoughts in the comments. Thanks for watching, and I'll see you all next time.